Hello student, welcome back to IBS. Now we are going to learn about what is financial accounting. What does it mean? So basically financial accounting is kind of process of recording, summarizing and reporting. Recording in the sense, suppose you need to book rent or you have some travel expense, so you will definitely debit your expense account whatever x amount, and either you will pay, or if you are buying through vendor or something, you will pay later, then vendor account will be credited, or cash or bank, whatever it is, so that amount will come here. So this is the transaction. Likewise, we are having millions of different transactions, okay, for all the nature of expenses or asset, everything. So we are recording. That is what, that is financial accounting. And summarizing in the sense, you have every expense account, asset account has been given one GL code, okay. For asset maybe you have given 0012, and for liability you are giving 0011, and for current liability 00111, okay. Like this you are having different GL code. So for expense you have 0130, like this. So in 130, not only one expense, I'm just talking about, let's take example of travel and expense account. In that you have hundreds of different travel related expenses being booked, okay. Or then printing and stationery, then you have cab. For all those will have some of the GL code number. So all this GL code number, whatever entry you will book here, that amount will be hitted here, okay. For travel expense, that amount will come like 50 rupees, and then again it is day 1 to day 2, some of the expense incurred, that will also come like this 50, then 150, then 200. All when you club all together, okay, so how much it is? 250 to 450. Likewise, you have all the GL, all the asset, all will be have been booked, all the recording is been done, hundreds and millions of entries is being recorded every day. Then in summarized form, GL amount will come, okay. For GL1 is this much amount, GL2 is this much amount, like this. In summarized way all the report will come. Then when you club together, then total cost will come, total asset value will come, total liability value will come. In this, out of total line item, some of them related to asset, then the total value of asset will come together, and also total liability value will come together, okay. Total cost related to expense will come together. So likewise it will become summarized, okay. Once it has been summarized, then we have to classify. Classification we are doing while creating chart of account, okay. When we are creating chart of account in balance sheet, when we are creating travel and expense, that time we are putting it into income statement in expense side. When we are creating asset related GL, that time we are fixing it and hitting it to fixed asset, okay, asset account. So that will go to asset account. Like for when we are creating liability related account, like vendor account, if you are creating for any company like XYZ Limited, so that company will, if it is vendor, then we will try to book, link this to current liability account. Likewise, when we are creating chart of account, that time we are linking it to particular nature. So based on nature, when we have linked all these things, then we will be doing recording. Once we done all the recording, that will automatically classify. Whatever recording we are doing, that is already classifying. In income statement related are going into income statement. Whatever balance sheet related stuff, it is going to balance sheet, and whatever cash flow related stuff, that is going to cash flow. Whatever equity statement related stuff, they are going to equity statement, okay. So likewise, while creating chart of account, we are deciding this nature of expense will go, this nature of cost will go where, and this is asset will go where, so and this is liability that will go to there. So likewise, when we define already, that time when you record slowly every day we are recording into, that is already classifying and also summarizing. Earlier, when you talk about 20 years before, that time people has to book all the entry, then they are classifying manually, and then they are making financial statement. That was very difficult, but now our life is very easy. We can easily create chart of account. Based on that, all recording you have to do, and classification and summarization and reporting also will be generated. With regard to income statement, balance sheet and cash flow and equity statement related report will automatically generate through ERP system or Tally or QuickBook, any of the sort. But now we need to do performance analysis, dashboard creating. That part you have to use either Power BI, Tableau, other stuff, okay. So that will bring you meaningful information, or use SQL to find a different pattern with regard to expense or asset or whatever it is, and find financial insight and present in front of management. But this is the finance course, not a data analysis or tableau. We will not go into that. We will learn what to develop our psychology so that we can easily ask those kind of question to the person who is using SQL, like engineer or software engineer. Okay, they are using a creating or data scientist. As a finance controller, finance director, we will have enough information what are the thing, while looking into the financial statement we can ask a meaningful question and ask them to give me this kind of data which reflect these are the thing, they should have this kind of, and we want report in this way and that way. So that you can ask him, and then these guys will work on it. Either software engineer, if it is data analysis, then these guys will provide you the data designing and related stuff. Software implementation, that time software engineer will work. And after that, if you want anything automation and transformation related stuff, that time there is a functional level software engineer that will help to design and our business analysis. So functional level consultant will take input from finance and they will make the software engineer understand, and then accordingly they do the modification for our requirement. I think it is the holistic view of what exactly going on currently around the globe that you should keep it in your mind, or if you did not understood it, so rewatch. What financial accounting will give us? The primary objective to deliver financial insight. This is the most important. Financial meaning, what we are doing, where we are going, where we are lagging behind. So these are the information given by financial accounting, and that assist users such as whom you will give all this insight. Whom we will give to investor, lender or creditor. Lender or creditor means supplier or your customer. Those customer who is dealing with you, they will also love to watch your financial statement. Okay, and the supplier, he is giving you credit, you are buying a product from him, he wanted to show your liquidity perspective, whether you have enough fund to pay him back or not. If it is your customer, if he is buying from you, so he will also love to see your financial statement. Okay, and creditor point of view, why they want to see your financial statement? Because you are selling to him, okay, and he is buying from you, so he is your client. Suppose you are selling him clothes, so he wanted to know whether if he will give you large demand, will you be able to fulfill or not, you have enough liquidity or not, so you can buy on credit and you can deliver us quality product or not. Okay, and if he is looking to get credit from you, he wanted to know will you be able to negotiate with them or not, your credit worthiness. So these are the things, whether you are following the compliances or not. Okay, you are having sustainability or not. If you are somebody who is new to the business, even though you are giving quality premium product, but people will not be switching to their supplier to new supplier because they don't know whether you will sustain or not, even though you share your financial statement. But since your financial statement is just 1 year old, so people will not love to move. Normally you might find such kind of cases when you are new to a particular market, even though you have good premium quality product, but people are not buying from you, they are keep on buying from old buyer. So these are the purpose, they are not willing to switch their old buyer because their relation will be damaged. And if you are new and you are not having credit worthiness, you are not able to sustain or not, they don't know, since you are new you may be sustain or not, so you will be able to deal with your competitor or not. So these are the thing will force them to not to deal with you initially. So likewise, if you will work for 2-3 years, then this is what the pain area for any business to grow. Initially it will take 2-3 years. This is I'm just giving you as a business planning related stuff, but still you can understand it, it will be better for you. So because as a finance person we should have good knowledge of business also, otherwise you will not be able to become good CFO or a good finance analyst. Okay, so it is better to keep getting in this kind of information. That is why this kind of creditor also willing to watch your financial statement. Okay, so that they can rely on you, they can make their smooth and right decision, because that is also decision will take their financial figure or financial risk kind of stuff. So they want to minimize their risk also, so that they can take informed decision, okay, regarding buying, selling and holding their equity. If you are investing into that company, so you want to hold your fund or not, that you will understand only when you will see their financial statement. Okay, and as well as extending credit or not. So if you are a lender, if you have given him that, okay, so you want to extend it or not, you will only know when you will see his working capital and liquidity related stuff. So then only you can rely on him, and you will see their revenue and their net income, whether they are consistently growing or not. So these are the things will give them confidence to take a decision to be extend with you, to be with you or not. Okay, these user rely on financial statement, as I said, to assess the potential future cash inflow to the business, whether you are going to generate cash or not. That will purely impact to their risk. Okay, while financial statements are crucial for decision making, obviously they are not the sole source of information. User must also consider external factors like economic forecast, political environment, and industry trend to make the comprehensive decision. Because not only based on financial statement, they will your client or your supplier will take decision based on your financial statement. No, not only this, they will also figure out environment is giving him option to work with you or not, what is the political stability, what is the market share, market growth, economy, inflation or deflation. These are the thing is also going to impact to them. Similarly, they are going to impact to you. So based on that, they will also take the decision based on the future what is going to happen. Maybe you are a buyer, okay, of cloth, and the person who is your supplier from Bangladesh or something. Okay, so if Bangladesh is struggling from some kind of issue and you are in India, you will not be able to deal with him because you may feel there is political crisis or something, or maybe some issue will happen, and then they will not be able to deliver you product, and you will not be able to commit to your client for large amount of things. So you will not be happy to work with him. Similar way, when they have found some issue in your country or something, political changes, economy or inflation, deflation, any kind of thing they will find, or they will see their your country currency is going down or going up. So these are all impacting their business, so which are not in company control, but that is called external factor. So as I discussed, financial accounting, these are the user, they take decision based on two important thing: financial statement as well as internal external factor of their business. They might have their all internal issue also. Maybe they are going to wind up their business, that may be the reason they will not work or something. There are 2-3 different reasons. Okay, so I think I'm done for the day. Okay, see you into the next session. Thank you very much.